What's going on, everyone? In this video, I'm going to show you guys how I journal, log, and review my trades so that I'm able to take away the mistakes from those trades and not make them again going forward. Whenever you take a loss, you're paying a premium for more information. So you want to make sure you're taking full advantage of those losing trades so that you don't keep making the same mistakes. It is not a good idea to take a trade, sweep it under the rug, and pretend like it never happened. When I first started trading, I would do that very frequently. I'd take a loss, pretend it never happened, and keep moving. And then what I would notice is the same recurring mistakes would keep happening. So if I would have understood this, it would have saved me months and years on my progress to consistency by taking in why I'm losing, what's causing these losses, and how I can improve them and mitigate them going forward. Let's go ahead and get into it. So looking at the TradeZella here, this is what I use to journal and log my trades. This isn't my complete journaling routine. I do use Notion for my back testing. If you guys want a full breakdown of how I journal, back test, and review, that could be another video that I do later on. Let me know in the comments below if that's something you'd be interested in. So taking a look at the loss here, it was a $288 loss. Not a big deal at all. And especially when you compare the size of my winners to my losers, this is a relatively small losing trade. So let's go ahead and get into the details. I traded 5 micro NASDAQs going long. Here you can see my entry and the stop loss. The profit target was 21,490. We'll go into the charts here in a moment, share with you guys what I was looking at. But the initial profit target was 21,490, which was the previous day's high. If you've been watching my educational content, you guys know we use time-based liquidity for targets every single day. The stop loss was at 21,322. I did reduce the initial stop, so you'll see that I did not actually take a $500 loss, but I was risking that on this transaction. Used an inversion fair value gap for my entry. And this is just a custom tag, something I like to track. I compare my performance on days where the opening range gap is larger than 40 points, and the days where it's smaller than 40 points, I do like to track that for data purposes. So there's everything on this side. Now let's go into the review, right? So what I was doing here was going long using an inversion fair value gap here. And then again, I was targeting that 2490 level, which is up here. So looking at the trade, you can see this is a good loss in line with my top-down analysis, anticipating higher prices into the hourly equal highs. Let me show you here before we get into the charts. This is how I got the 21,490 level. It was the previous day's high, and I was aiming for that on the hourly time frame. So the targets were delivered perfectly, but the high resistance price delivery prevented me from holding for the entire run. As I trailed my stop loss, I was knocked out prematurely. I knew better than to trail my stop in these conditions, but I was losing my patience with this price delivery. And I should have left the office and left my stop at the original entry since I knew these conditions present these signatures. So what am I saying there? The targets delivered perfectly, right? So that's something that you want to do in your journaling and in your reviews is you want to speak positively to yourself, right? You don't want it to be negative. You don't want to say, I'm such a dumbass. I knew the market was going here and I trailed my stop too tightly, right? You want to be positive and you want to encourage yourself. No one in this business is going to encourage you externally. You have to be the one that does it yourself. So right away, I want to commend myself for having the correct analysis, but then I want to review what caused the loss in particular. So I knew better than to trail my stop in these conditions. What conditions? Well, looking at the charts here, we can see this is a high resistance liquidity run, seek and destroy profile for the morning session, which means we have a short-term low here taken out, short-term high taken out, short-term low taken out. So because I could anticipate the seek and destroy when I was live actually managing this trade, I was then expecting the market to take out this high here, make a new high of day, and then again get to that 21,490 level. What I'm saying in particular about the conditions is that it's a high resistance liquidity run. Now, what does that mean? Well, in the low resistance liquidity run, the market hits an imbalance, quickly expands the targets, and it doesn't have a lot of overlapping price delivery. Here we can see that is not the case, right? Market trades higher at 9:30, drop, trades higher, down, and just a lot of back and forth, right? Not easily and quickly running to the liquidity. Right here we can see a fair value gap. We trade into it, comes back down into that fair value gap to reclaim it, and then look at all the overlapping price action here. On these days, I know to let my stop breathe, which simply means if I'm entering here, I need to leave my stop down here. And I can't worry about all these fluctuations because that's exactly what a high resistance liquidity run is going to do. It's going to overlap the same range for a long time, and it's going to have deep retracements on the stop losses as we've seen here. So that's why I'm saying in my journaling, I knew better than to trail my stop, but I was losing my patience, right? I was live trading. I was already on stream going on an hour and 15 minutes. So as I was entering here, my stop loss was right below these 3 consecutive down close candles or the bullish order block. As the market made ground in my direction, I then reduced that stop to this low here because I didn't want to see it take out that low. However, I know better that in a high resistance liquidity run, these are signatures that the market will do. So had I left my stop where I initially had it, then it would have been a profitable transaction for I think over about $1,000. The reason I want to share that with you guys is because there's days where I have a perfect analysis. I know where the market's going. I wait for the run on stops as we saw here. I get a displacement, order flows confirm bullish, everything that would qualify an A+ setup, and I can still lose money, right? Crazy to think, but that's absolutely the truth. And I wanted to make a video on the losses because I know you guys see many trades when I'm winning, when I'm using the models, but I also want to show you guys the other side of the equation, right? And losses are completely normal as long as they're managed and they don't eat into your profits, right? So one losing day is not going to eat into my December profits or my November profits because I'm able to manage my losses very well and keep them small. So let's go into the rest of my review here. This is a good loss since it was in line with my higher time frame analysis. I recognized the conditions, so I traded with my lowest size knowing it would be a hard day. So because I'm able to see that this price delivery is high resistance, I'm going to go in with my lowest leverage, which for me, for this account in particular, is 5 micros. Anything less than 5 micros is just not worth taking the trade, and I'll pass it up. So my lowest leverage was taken on this transaction. So what do I mean by a good loss, right? What defines a good loss? Was it in line with my higher time frame analysis? It was, right? Did I recognize the conditions, right? Did I manage my trade appropriately based off what I was expecting in price delivery? Yes, right? Because I traded with my lowest size, knowing it would be a more difficult day. Well, you may be asking, well, if you knew it would be a difficult day, why take the trade? Well, because many days I'm able to still find profitability even in these tough market conditions. And when my model forms, I have a saying, the model forms put the risk on the table and you just let it play out, let the market take control. That's exactly what I did here, and I live with the outcome. And then lastly, it's the cost of doing business, and we're on to the next one. So these are things that I do to journal, to review, to then get insight from my losing trades so that I can improve upon them going forward. So now I know for the next one, if I'm trading high resistance liquidity runs, don't get impatient, don't suffocate the stop loss, leave it where I initially had it and just let the trade play out. I was even saying this on live stream where, all right, guys, it's been a long session already. I'm going to get going, head to the gym and just leave the trade be. Ended up trailing the stop a bit too tight, knocked me out. No big deal. It's part of the business. It happens. So I hope this part was insightful with regard to the journaling, how I input my data, and what it is that I'm doing in TradeZella. Now let's get into the charts and see why I was looking for higher prices and look at the analysis. And then I'll share with you guys another trade I took on my TradeStation account into these highs. And I'll go ahead and share with you guys my high frequency trading model that I use if the market's close to a draw in liquidity. All right, so starting from the daily chart, if you guys were watching the weekly outlook, which we do every single Sunday, you guys remember we discussed the swing high that formed inside this imbalance, right? So we have an imbalance, we created a swing high, also order block, that's extra. So a swing high inside the bearish order block, inside this fair value gap, allowed us to see the market was going to draw into these equal lows here. We dropped all week, Monday, Tuesday, Thursday, since Wednesday doesn't count as a trading day since it was a bank holiday, and then the market dropped into targets. Very important. So the fact that Thursday reached targets, that can then give us the anticipation that the weekly range has been capped or the low has been priced in. So then what I'll look for on Friday is a retracement back into the weekly range that was created, right? So that sets my daily bias. We got the targets delivered from the outlook. And then once that happens late in the week, then I start looking for a market reversal profile to trade back into the range. So if that's the case, what am I going to look for the market to trade back into the range? Well, if we know the market only moves to liquidity and inefficiencies, let's look at this on the hourly chart. Do we have any inefficiencies here? No. but we do have liquidity above these equal highs here. And yes, there's a high here and here, but just using the low-hanging fruit with the previous day's high, that's what I was aiming for. So we had a consolidation overnight. We get a displacement higher at 9 o'clock, and then that sets the bias to look for higher prices into the hourly equal highs after that previous week's low was taken out. So 15-minute chart, market trades higher into the pre-market. We then get a deep retracement into the fair value gap here and order block, these two consecutive down close candles. And then once we showed strength away from that, then I could very clearly see the market was trading into these highs here and these relatively equal highs here and here. So that's my bias. That's the drawn liquidity top down, right? The daily reach targets, the hourly chart has equal highs, the 15-minute has equal highs, and now we have bullish institutional order flow. So then what I'll look to do in my lower time frames is simply just take a discount entry, manage risk, and try to get a run into the higher time frame targets that I'm looking for. Looking at the 5-minute, again, we get a deep retracement, the run on stops here. So here the stops have been taken out. So then once we displace higher, we get confirmation in the order flow. I'm then going long in here, looking for a run into this high here, and then that 21,490, which was the previous day's high. Market ended up trading higher. I trailed my stop just below this 5-minute down close because once we traded through that, I wanted to see that act as support. I should have known better. I knew it was a high resistance liquidity run and my stop should have stayed down here. We learn, we keep it moving. Market dropped, took out this swing low here, and then we started trading higher. And then what I could identify was these equal highs here, and then I was able to take a scalp, which we'll go into here in a moment. So again, we see the seek and destroy profile. Market drops, takes out these lows here. Once we traded through this fair value gap here, that was the trigger for me to look for higher prices because now this fair value gap that should send price lower if it's bearish was violated. So now it's not just enough to have equal highs here and here as a draw on liquidity. You now want to have institutional order flow confirming what you're looking for, right? So we see the market drop down, takes out this low. So what does bullish order flow look like? Well, levels that are above market price, the market should trade to it and through it, right? So we trade higher, we violate that fair value gap. We create a bullish order block here with these last two down close candles. And then once I saw this order block here used as support with this first fair value gap, which is what that is, that's the first fair value gap that formed after 9:30. We used it as support. So as we're trading higher here, I'm using this inversion fair value gap here as a long. Deep retracement, but for my stop placement, I'm always doing 3 key levels. So a note for stop placement, from where my entry is, I want to have 3 key levels in between my entry to where my stop is. So in this case, we have the inversion fair value gap that I'm using as a long. We have the traditional fair value gap, which is a buy side imbalance, sell side inefficiency. And then we have these 3 down close candles and my stop is just below this right here. If I would have left that stop, again, would have been able to get the run into these equal highs and this high here. However, I ended up trailing the stop up to here. This deep retracement took me out and everything was still a green light for higher prices. So again, one thing I want you to take away from this here is you're going to get it wrong, but it's all in how we manage it, right? It's not going to be making money every single day. Anyone that's saying that is absolutely misleading you and lying to you. But what you want to understand is how to handle and how to manage these losing days so that they don't eat into your profits and eat into the gains that you're making week to week and month to month. As promised, going to review the high frequency trading model that I use. So many times I'll use this when I miss an initial run into what I'm looking for, right? So since I was stopped out here, after that I cut the stream, went for a walk, got some fresh air. And then when I stepped back into my office, I could still see everything was a green light, right? Everything was still in play for higher prices. But I didn't trade it on that account because rules are rules. Once I took 2 losing trades, I said I wasn't going to trade that account anymore. So what I did was I shifted my focus to one of the other accounts that I manage. One of the things that I talk about in community when I'm training, mentoring, is once you have this skill set, you can create multiple streams of income with it. So what I do is I manage several personal accounts, but also do a little bit of prop accounts on the side, not as much as I used to, but more so I'm focusing on managing my personal accounts. But what I've been able to do is create multiple income streams by diversifying the risk across my trades, right? So not all the time I'm copying all my trades, all my accounts every single day, especially on a day like today, right? I was able to identify it was high resistance. I was able to identify it was difficult price action to trade in. So I'm not going to size up. I'm not going to copy all my accounts and trade them. And those are all things that I talk about when I'm live and I'm trading. The reason being is because not every trade should have the same risk, right? And you want to know what are conditions where you take low risk, what are conditions where you take high risk, and that's what I like to show by example. So since on this account I hadn't taken any trades, I was comfortable going in and executing on my high frequency trading model, which is simply taking advantage of the market being close to a draw on liquidity, right? We had these equal highs here from the high of day and the high from the previous day, and then we had these relatively equal highs here. So what I'm able to see is the fact that we have a 15-second fair value gap here, like that, blue, and let me take off the labels. So I'm able to see that we have a 15-second fair value gap. I wanted to go long in here, but because it's the 15-second, these candles are printing very quickly. So once we traded into it, we left some of it open. I'm going long here as we're inside these actually three consecutive down close candles, which is also a bullish order block. So I'm going long inside these three consecutive down close candles, which is also a bullish order block, right? So there's a couple ways to trade the order block. Let me show you here. These three consecutive down close candles looking at the opening price, that can be as long as it's trading down into it, but you can also buy as it's leaving that range, right? Because sometimes it won't return to the order block. So if I'm really bullish, I can go long inside that level, targeting this high. So I was able to get a 21 to about 24. So about a 23 handle scalp. So able to put some numbers on the board for the equity for this account. And that was the trade. That's what I was able to do with the levels I was working with here on this day. So with that, guys, hope this one was insightful. If it would be helpful for you guys, let me know, comment below. Would be more than happy to make a video for you guys on my full journaling protocols, how I backtest, how I log my trade data as you saw today, and just give you guys the full picture. So with that, guys, hope this one was insightful. See you on the next one.